it's pretty plain to see that there was gold out of Fort Knox, West Point, etc., that had been leased out. I don't know. I don't think an audit is going to be done, and if it is done, we're not going to get the real story anyway. It would be very interesting to see a stadium in China just filled with gold. Here's our gold. What do you have? If that were to happen, you would see a complete implosion in the value of the dollar. The dollar would be sold everywhere. And when I say the dollar, I'm including treasuries. Treasuries are the foundation to the financial system, and treasuries are quicksand. They're dollar-based, and they're issued by a bankrupt or insolvent entity.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for May 19th through May 26th, 2025, while supplies last. First this week, we feature backdated 1-ounce gold American Eagles at just $89.99 over spot per ounce. 1-ounce 2025 silver American Eagles are just $4.99 over spot. Next, we have 10-ounce silver Royal Mint coins at just $2.99 over spot per ounce. The 10-ounce Britannia, 10-ounce Royal Arms, 10-ounce Little John, and 10-ounce Merlin are all 4.9s fine. And we have a very limited quantity. Again, they're just $2.99 over spot per ounce while supplies last. Next, backdated 1-ounce gold Canadian maples are only $69.99 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're delighted to have this returning guest. Bill Holter is a former Wall Street branch manager. He's also a licensed bullion dealer. He's widely followed for his commentary on the direction of all financial markets. Bill, thank you for joining us again here on Liberty and Finance.
Thanks for having me back, Don, again.
I want to mention that we're recording this is Tuesday, May 20th, 2025. We've got a whole boatload of questions that were submitted by viewers ahead of your arrival. They quite broad in base here, so I'll pick a few, try to keep these clustered in topical areas. One question that a lot of people have been asking over the last few years when we've had, well, let's just say the global lockdowns and everything that came with it, is kind of a shakeup in hands being revealed by different countries on how they're going to handle things when push comes to shove. There's a question from Tim Cook who says, I'd be very grateful if Bill could maybe mention his 5 best and 5 worst countries for political risk regarding mining jurisdictions.
As far as North America globally is considered the best jurisdiction, and in my opinion, I don't think there's going to be a confiscation like there was in the 1930s. I think it's much more likely that mining companies in the U.S. and in Canada get nationalized. So I would put North America on the watch list as far as not being the best jurisdiction. The problem with answering this question is administrations, politics can change on a dime. So I really don't want to go on the record saying what I think is what are the better jurisdictions, because that can change with an election. And it can also change with, once the financial system collapses, pretty much all bets are off. And to me, there's obviously two big risks in the mining industry. One is the operation risk. If you got an underground mine, does it collapse? Does it cave in? And then you've got the jurisdictional risk. Do you have, does the administration in whatever country you're talking about, does that change its mind? Does it move toward, nationalizing mines? It's a tough question. I really don't want to go on the record, like I said, because, tomorrow morning you could have a coup or an election or whatever, and things change. But I do believe that North America is not the pure safe haven that it once was for mining companies, just simply because, that can change. I think it will change. And if you look at the direction of, look at the direction. Well, look where we were over the last 4 years in the United States. Look where Canada is right now. They're not, they could shut an operation down in a heartbeat.
Related question regarding jurisdictions is how they treat gold and silver from a monetary basis. There's some concern that there's a big difference between the Western sphere that are de-emphasizing the role of precious metals and playing up other aspects such as digital, versus the BRICS Plus countries that are definitely putting a lot of their eggs in the basket of precious metals as a tangible asset. Rick Evans asks, how would a person or governments make gold and silver worthless or undesirable if they wanted to?
Gold and silver can never be made worthless. And the reason being, gold is accepted anywhere and everywhere around the world. The West has tried since August 15th, 1971, to demonetize gold. And the peak of their success would have been the year 2000, when gold hit $252 an ounce. Here we are now at $3,200. You were looking at $35 an ounce in 1971, and we just recently hit $3,500. So that is 100-fold increase. And another way to say that is the dollar lost 99% of its value since 1971. So to answer your question, I don't think there's any way that gold and silver can become worthless. And the dollar itself is the reason behind the BRICS formation in the first place. And then, of course, what really cemented psychologically to the BRICS and proved to them that they were correct to try to exit and move away from the dollar is when Russia had the $300 billion in reserves sequestered, absconded with, whatever you want to call it. What was it? It was October of 2023. If the United States can steal $300 billion from Russia, they can steal whatever they want from anyone they want.
If you follow that logic, now your former partner Jim Sinclair often talked about with you and your viewers about a man-made reset that was when the keepers of our financial lives got pushed into a corner, they would try to reset the system and it would fail because it wouldn't be based on sound underlying reality of mathematics and tangible assets, etc. Time or Distance asks, did Jim share his, quote, first man-made reset number for gold?
And as a matter of fact, I think his number was something like $3,500. So we're in that neighborhood right now. You're watching the man-made reset. Just again, look at the BRICS versus the West. So there's your divide. There will be a reset from that. But as Jim talked about, being a man-made reset, it's not going to work because whatever the reset of the dollar is, it's still going to be a fiat. Even if they push us into CBDCs, what is the backing to that currency? There is no backing. Whereas, the BRICS is going to back their currency somewhere 20 to 40% ratio. We don't know what that number is going to be. But even at 20%, you'd have to have big numbers. You probably have to have 15, 20,000 gold just with a 20% backing. The second reset, and there could be a third reset, is going to be more Mother Nature. It'll look more like Mother Nature, like a real reset, something that is done by free and unfettered markets, as opposed to a new currency being jammed down our throats, which is the plan in the man-made reset.
There's a question here from A. Rider K about what can be done as we approach the end game. What's the remedy for this economy? Overthrow government tyranny or fix it from the inside?
I don't think either. I think the fix will be a complete collapse of the financial system. The reason being, I mean, look what happened this past Friday. Moody's downgraded U.S. debt. I mean, the U.S. debt should not even be close to AAA rated. I mean, all you have to do is look at the numbers. You look at the amount of interest alone that has to be spent. We're looking now at roughly 5% of GDP is the interest alone, and we're having to borrow that to make the payments. So the numbers just don't work as far as from a financial standpoint. The treasuries are the foundation to the financial system, and treasuries are quicksand. Treasuries they're dollar based, and they're issued by a bankrupt or insolvent entity. So the math or the problem is that the financial system has been held up by debt and piling more and more and more debt on the system, and that's what's inflated assets is the amount of new debt coming into the system.
Questions here are related to this about refinancing of the government debt at higher interest rates. There's different numbers and different time frames that people place in their questions, but the principles are the same. Johnny Truck Driver says, how does 5 to 6 trillion get refinanced in the upcoming 14 months?
I think the number's higher than that. I think the number's about 9 trillion has got to be refinanced. And
yeah, we got another one from Anthony Shepard who says, with bond yields rising on long-term bonds and 11 trillion having to be refinanced this year, are those rates attractive enough to be bought on the open market, or will that debt be monetized by the Fed's balance sheet? So
yeah, it
sounds like
the answer
multiple trillions.
Monetized, because there's no way that the world is going to step up and bring, 9 or 10 trillion into an asset that the world is already moving away from. It's going to be the Fed. The Fed is going to buy treasury debt. And I mean, if I forget when it was, I think 2019, when the Fed and Treasury were merged, and the Fed was always separate from the Treasury, and it was always completely taboo for the Fed to monetize, because I mean, we know what happens with monetization. The currency ultimately collapses. It collapses in purchasing power. It ultimately, the fiat goes to its intrinsic value, which is zero. So when they merged the Fed and merged the Treasury together, I mean, that's your right pocket and your left pocket, and the right pocket's borrowing and the left pocket is just printing money to buy those bonds. And I mean, if you've got the same entity buying their own wares, then what are those wares worth? And the answer is zero. And that is the foundation to the whole system.
Talking about the new foundation that you envision, or the only one that's durable and lasting, being tangible assets with intrinsic value, Jack Woodruff says, how much gold do you think the U.S. and China have?
The U.S. and China? Well, first off, I mean, I could show you on the back of a napkin, simple, and this would have been 6, 7, 8 years ago, that they had already accumulated 25,000 metric tons. I think the number is now at least 35,000 metric tons. And
You're talking about China.
I'm talking about China. If I said the U.S., I was wrong. The U.S., we say that we have 8,300 tons. It's not been audited since the 1950s. How much do we really have? My guess is we probably have a couple thousand tons left. And even if there is gold in Fort Knox, West Point, etc., a lot of that is already encumbered. It's been leased out. The paper rights or the paper ownership to a lot of the gold, I think, has already been moved, over the years to other entities.
Yeah, there was a lot of questioning going on when we were being told about record and unprecedented flows of physical gold from London to New York and in and out of the COMEX warehouse over the first quarter of this year. And also statements, kind of vague statements by Trump or Bissett about whether the Fed should be, whether the U.S. gold reserve should be audited, Fort Knox, et cetera. Any comments from you on either of those?
I don't know. How do they do an audit? I mean, if they do an audit, and how do they come out with the real numbers? Because I mean, it's clear, and we know that so much gold had been leased. I mean, even going into the year 2000, 2001, back when Canada sold their gold, Britain sold, what, 40% of their gold. You had mining companies all over the world forward leasing, and then, of course, the price started to rise, and those had to be covered with billions of dollars of losses. I think it's pretty plain to see that there was gold out of Fort Knox, West Point, et cetera, that had been leased out. So I don't know. I don't think an audit is going to be done, and if it is done, we're not going to get the real story anyway. I think what would be really interesting is for the world. When I say the world, I'm talking, the BRICS nations, led by Russia and China. It would be very interesting to see a stadium in China just filled with gold. Here's our gold. What do you have? And I think that is, if that were to happen, you would see a complete implosion in the value of the dollar. The dollar would be sold everywhere. And when I say the dollar, I'm including treasuries. So the Federal Reserve setting interest rates, they're in the process now, but under that circumstance, they would completely lose control of the yield curve. You'd see interest rates go to 10, 20, maybe 30, 50% to try to defend the dollar. And, now we're talking Banana Republic stuff, overt Banana Republic stuff.
There's a couple of questions here about how people who are acquiring gold or silver will take advantage of that in the end game. There's one question from Costa Smitsios says, is it a good strategy during the end game reversing precious metals into real estate, or a little later when the new monetary system is established?
You're not going to want to, what I think what he's asking is, when do we sell our gold? When do we sell our silver and buy other assets? I don't think you can do that until there is a currency, some type of currency that can be trusted. Once there's a currency that can be trusted, then you'll see another and another. And what that will be basically is the world going back to asset-based currencies, whether it be silver or gold or oil or what have you. As far as real estate is concerned, why would your the questioner, why would he even consider moving from moving from gold to real estate at these levels? Because real estate is a prime example of an asset that's been blown up in, I don't want to say value, but in price, way past the true value. True values on real estate are basically what kind of income, what kind of revenue can you derive from that real estate. And I mean, years ago, you could buy a piece of real estate for way, way less, with the cash flow being a much, much greater percentage than what it is now. Now it's all speculation. People buy real estate because, quote, it goes up. And what the reasoning behind that is, there's been so much debt. I mean, all you got to do is drive through a major city and see stuff being built. And you look at all the big, skyscrapers. None of those are owned free and clear. None of these things are being built with cash. They're all being built, bought, and sustained with debt. And in a debt meltdown, you're going to see real estate drop a minimum. You've already seen it in commercial real estate, but you're going to see a minimum drop of 50%, and probably more likely 70, 80, even 90% in price to get real estate back to a foundational asset. When I say foundational asset, meaning whatever cash flow can be derived from that real estate can carry the whole thing and give a dividend, if you will. If you own a piece of property that the cash flow just covers all your expenses, so it's not even negative cash flow, but there's a lot of deals now out there because of price that are negative cash flow. But we get to the point where cash flow, where you're not cash flow negative. The bet right there is real estate's going to go up. That's the only reason you would want to own the real estate, because if it's cash flow neutral, if you're not getting anything from it, where's your win? Your win only comes if the real estate goes up. But with a debt liquidation, real estate is going to get destroyed. And when all is said and done, once we go through the tumult of a financial collapse, real estate, by and large, is going to be seen as a liability rather than an asset. Because, let's say you have an income-producing piece of property and the economy goes to shit. Now you're trying to carry that, then you got to pay the interest, you got to pay the taxes, and of course taxes have exploded over the last 5 or 10 years. So I'll just leave it by saying that I think real estate is going to be seen as a liability rather than an asset at some point in the not too distant future.
Yeah, we've spoken with Michael Pinto, active money manager, about that, and he's also talking about the necessary rollover in the real estate market, just because nothing's selling. The sales are so far down, and you've got both corporate and residential. My personal anecdote is that in our 55 plus community where we live, that there were 4 homes for sale when we moved in here a little over 2 years ago. Now there's over 40 homes for sale, and they're sitting. The only 2 that we're aware of that sold were internal moves within the community, people wanting to get closer to the lake or whatever. But otherwise, from the outside, they're just sitting, and yet prices and affordability index is at all-time, worst affordability index ever in U.S. housing. Any thoughts from you on what will be the further catalyst to cause a rollover and kind of a reconciliation there between the lack of sales in the real estate, in residential real estate at least, versus the sustained high prices?
Perfect example is Washington, D.C. You've got the Doge cuts. You have the gravy train is ending. So the cash flow to individuals is ending. We go into any type of recession, a deep recession would be even worse, but we're going to go into a recession. When that happens, people lose jobs, there's less income outstanding, and that makes it even more difficult for the buyer. When I say for the buyers, buyers, you have to, in order to have a sale, you have to have a buyer. And if you're going to have a buyer, that buyer's got to have cash flow. And if you're cutting cash flow throughout the system, just look at how many properties, literally thousands of properties popped up for sale in Washington, D.C. in January, February, March. And they're just sitting on the market. Now what's going to happen is, after 3 months, 4 months, 6 months, then you're going to start to see the price cuts on the asking price. And then you're going to see the desperate people will end up selling below the already cut prices, and it's just a domino effect to the downside. And it's the illustration of I don't want to call it a debt collapse, but it's like a Ponzi scheme that if you're not getting new money into the system, the whole system collapses, and that's where we're headed with the whole system. But we're talking about real estate right now. Without the cash flow, with less cash flow, there's less buyers. It's pretty simple.
Yeah, it's especially true for first-time home buyers that are just completely priced out of the market. They're living with their parents,
right?
Kind of like that.
When you're talking about first-time home buyers, think about who the first-time home buyers are. At least half of them, probably more than half of them, are purple-haired people with nose rings that don't believe that they should have to go to work at 8 o'clock in the morning and aren't allowed to come home until 5 o'clock. I mean, the work ethic is gone in the younger people in this country. And it's the younger people that buy first-time homes. And if the first-time homes, if sellers of first-time homes can't sell their property, they can't move up to the next property. So when you start with the smallest houses not selling, it's like a ripple effect upwards to the higher price homes.
To when we were talking about the exit from precious metals in the end game, and you were saying you need to have a new currency established. I know we're all under normalcy bias to some extent of thinking about the common currency of the day being normal. Alvin 816 says, when it comes time to sell gold and silver, I would want to receive cash, not a check that has to be deposited into my bank account, leaving a paper trail. Can you suggest a way around the check other than going to the local coin shop, if those even exist when the prices of gold and silver go ballistic?
Yeah, that's a question the guy's asking, how can I avoid paying taxes? And I mean, I'm not going to give advice on.
I think this one wasn't about taxes. It was about just the traceability of a transaction at all. Just not wanting to be exposed.
Cash. So why do you not want a paper trail? You don't want a paper trail because you don't want to pay taxes, and that's not legal. Now, if the question was,
what about the flip side where people?
If the question was the other way around,
go ahead.
How do I hide from the government the fact that I bought gold or silver? I don't see the necessity for that because it's legal to do it. You can exchange currency for metal, and I don't see any possible way that the government goes house to house confiscating coin, because the first day there'd be over 100 people blown away at the front door. I mean, I don't see that as a possibility. It's much more likely that they'll do some type of tax scheme, raising taxes on precious metal sales.
Some people who are willing to pick up and do some work on their own to figure out what's going on are still feel stymied by the lack of truthful information that's available. That's one of the reasons our channel, it's one of the reasons you've been speaking out over the years. E. Burkett says, Bill, so often I've been told to do my own research, but in a world where numbers are either delayed, obfuscated, revised months later, or changed outright in the way that they're calculated compared to past formulas, where is the best way to accumulate factual information to, quote, do my own research?
That's a difficult question to answer because I mean, one of my God-given gifts is that I got a nose for bullshit. I mean, I can just look at something and I can say, well, either that's wrong or this seems correct. It's a God-given gift. As far as digging, I would say once you start digging, be skeptical of everything. And as you're reading something, try to verify it. Verify that what you're reading, go to other sources. Just on any particular topic, go to other sources to verify what you're reading. I mean, the bottom line is you got to dig. You can't just listen to what people are saying or what their opinions are, because I don't know, 7, 8, 9 times out of 10, it's bullshit. And I mean, I really don't know how to tell somebody, what's the golden website or what are the golden websites that will verify whether something's true or false. And there's not such a thing. You have to question everything. And if something doesn't make sense, dig into it as far as you can, and make sure that you've got take all the information and analyze it yourself. I mean, trust your own gut and don't be gullible. Question everything.
I know one site that can help people in that process is shadowstats.com. We've had John Williams, the founder of that, on several times.
because John Williams, he analyzes inflation, unemployment, GDP. He analyzes all of the government statistics using 1970s and 1980s formulas, because all those formulas started to change the end of Reagan and then into Bush, and every administration after administration has changed the way they compile unemployment numbers, inflation numbers, et cetera, et cetera. And I mean, if we're saying we have 3% inflation now, and John Williams is what, 15% or whatever, because he's compiling those numbers the way they did originally, the way they should be compiled. And now the whatever it is, whether it's unemployment, GDP, inflation, et cetera, all of those formulas have been changed to make the numbers look better, and they still look crappy.
Yeah, one of the most painfully obvious examples of that, as he has pointed out when we interviewed him, was that the cost of living adjustments they make for Social Security payments are even cooked even farther than the CPI to make sure that they're not giving appropriate increases in payouts to recipients of Social Security.
I mean, it would force the bankruptcy sooner than the way they're compiling the numbers now.
We've spoken with you a number of times in the past about preparedness. Old Route 66 says, what if nobody will barter for my silver and I don't have booze, cigarettes, or ammo to barter with? Am I out of luck in a spit hits the fan scenario?
I would say you should have booze, cigarettes, and other barterable assets. But I would urge him to go to a farmer's market. Ask the farmers at the farmer's market, would you accept silver? Now, I would not pay with silver now. I mean, why use good money when you could use bad money? But you'll get an answer from farmers, and I think you're probably going to find 8 or 9 out of 10 farmers will say, I prefer silver.
Another question that brings it closer to home even more. MP 1965 says, is Bill buying gold now or silver now?
I'm buying silver, and I recommend that people buy silver over gold. Unless you're talking about big money and you've got storage problems and you don't want to store the metal at a non-bank private vault. Just because the ratio is 100 to 1, man's ratio, it takes 100 silver ounces to buy 1 ounce of gold. God's ratio is less than 10 to 1. So, figure it out for yourself. Which one's right, man's ratio or God's ratio? At 100 to 1, we dropped to 50 to 1, and your silver the silver has doubled in purchasing power versus gold. If it goes down to 25 to 1, you're looking at 4 times. So I think it's definitely in the cards that silver is going to outperform gold from these levels.
This one's a little bit interesting, and given that you live in Texas, Low Blood Pressure asks, do you believe Texas will secede? A Texit. Yes or no, and why or why not?
I don't know, but I hope so.
Why do you hope so?
I hope so because the way the Constitution was set up, the way this country was set up on states' rights. It was not set up with a federal government basically that overlooks or oversees the states. I would much prefer to live in a state, whether it be Texas or another state, that's a sovereign state and, joined with other states and the federal government basically just providing the absolute bare necessities. Because the federal government it's not the state of Texas that's taking my civil liberties away. It's the federal government.
And I think that's why we're seeing a lot of flight to freedom-loving states, which causes its own set of challenges. But it's certainly clear people voting with their feet in that regard.
And also taxes. That's another reason people are moving from California, New York, Chicago, or Illinois, and they're moving to, Tennessee, Florida, Texas, states that don't have an income tax. They're voting with their feet are moving with their pocketbooks.
We've got a lot of affection expressed in our questions about your relationship with your former partner, Jim Sinclair. God rest his soul. Nathaniel Person 600 asks, do you have any story about Jim Sinclair that you think most viewers might not know that they should?
Yeah, here's a good story. I mean, Jim had all kinds of pretty funny stories. He was the one that really built a huge futures contract position in gold in 1978, 79, and into 1980. And in late 1979, I believe early in 1980, he told me what he did was he went out and he hired a Jewish actor to dress up as an Arab to walk out onto the COMEX floor, walk directly to his trader, shake his hand, speak for about 2 minutes, and who knows, maybe they were talking about, what are you going to have for lunch or whatever, and turn around and walk off the floor. And as soon as traders saw an Arab walking up to Jim's trader, gold was up like $50-$75. And I mean, you're talking about, $500, $600 gold to see a $50 move or a $75 move. That was enormous. It was a 10% move because people believed that, oh my gosh, Sinclair's partnering with the Arabs. So, I mean, that was a pretty funny story that, it was true. It was a true story. And that was Jim, that was his mindset to do things like that.
This last one will bring a smile to your face. How well can Andy ride a horse?
Shit.
Well, he's got a good teacher. You got to work on that. So
he can walk. Got a little nervous when the horse broke into a trot.
I got to confess that when my wife and I were passing through, we were actually on our way to Texas. We've been there several times for different reasons. And we always make Pensacola a halfway stop. And we went to this horseback riding place in Pensacola run by a lady who took an extra level of diligence to make sure that we knew what we were doing. She put us in the arena. She taught us how to do keyhole turns. She taught us to do, and there's like, I've never been so scared in my life as when that horse that I was on, when she said, you tell him, giddy on up. And when he did, I felt like I like a scene out of Ford versus Ferrari. It's like he was going to shoot out from underneath me. I just hung on for dear life because that horse could move. So anyway, any updates on your horses? Sorry?
They're powerful animals.
Oh my gosh, I had no idea. Any updates on your horse situation?
Right now, I don't have a horse. Principe died in a little less than 2 years ago. I bought another horse, kept him for about a year, and we just didn't. And it might have been me. I mean, it was a good horse, but we just didn't have the connection. I ended up selling him. And when I say it might have been me, I mean it's. I don't know what the word would be. Just the depression that my buddy for 17 years. I mean, I wake up every morning, get on him. I mean, I never had to tether him anywhere. I could just drive up with my pickup truck and he'd be at the gate waiting for me. I let him out. He'd walk to the back of my pickup truck. I put a bareback pad on him and a hackamore and take off. I mean, I didn't have to worry about him running off or anything like that. It was, I don't know. It was like having a brother.
It's remarkable how animals can connect with a part of our hearts that is reserved there just for them, and it'll always be there.
Yeah, and
for them, that'll always be there.
Andy and I are going to do a second half because there were some things we didn't talk about, and there were a couple things I wanted to clear up. And this is one of the things I'm probably going to mention when I talk with Andy, is that Principe was a carrot slut. The horse would do anything for a carrot. And I had about a 2.5 minute at liberty routine, nothing on the horse, just me and the horse. And I mean, and everything was in Spanish. I could say circulo, he'd walk around in a circle, come back, and I'd say el revés, and he'd go the other way and come back. I mean, it was 2 minutes. I mean, he taught me things, and I'd give him a carrot afterwards and then keep doing it, and that became part of the routine. I would teach him things. I mean, yeah, of course, at the end, you always would bow. I mean, he just had fun. But he would do anything. If he knew he was going to get a carrot, he would try his best to figure out what I'm asking him to do.
Well, Bill, we're grateful for all the carrots that you've given us here on your visits as a guest on Liberty and Finance, and we look forward to more in the future. And we just wish you the very best, and hope that you'll find another horse that you connect with at just the right level. And thank you, as always, for joining us on Liberty and Finance.
Thank you, Dunnigan.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for May 19th through May 26th, 2025, while supplies last. First this week, we feature backdated 1-ounce gold American Eagles at just $89.99 over spot per ounce. 1-ounce 2025 silver American Eagles are just $4.99 over spot. Next, we have 10-ounce silver Royal Mint coins at just $2.99 over spot per ounce. The 10-ounce Britannia, 10-ounce Royal Arms, 10-ounce Little John, and 10-ounce Merlin are all 4.9s fine. And we have a very limited quantity. Again, they're just $2.99 over spot per ounce while supplies last. Next, backdated 1-ounce gold Canadian maples are only $69.99 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.